Public Investment Corporation, Africa's largest asset manager, has invested an additional 150 million rand in Daybreak Foods, bringing its total investment to 1.7 billion. The PIC now owns 100% of the company, which has struggled with poor financial management and corruption. A business rescue plan is expected by August, which aims to turn the company around and avoid liquidation. For more on this, we are now joined by Gareth Cremen. He is a commercial and business rescue lawyer. Very good morning to you. Thank you so much for making time for us. So there's been a lot of news around what's happening at Daybreak, but what you make of the latest development from last week?
Look, certainly, if you look at the life of Daybreak, you need to look at the historical issues that it was plagued by. And coupled with that is, you need to ask the question, is business rescue the suitable vehicle for an entity that is in severe financial distress? And the answer to that in the life of Daybreak is yes. The other option for Daybreak at the time was a liquidation. And liquidation certainly would not be viable. At Daybreak Farm itself, you're sitting with approximately 2,800 employees, and there are ongoing supply chains directly below that. So certainly business rescue would have been the suitable alternative when the company found itself with its back against the wall.
Yeah, and now with this move, does it make things a bit better for the outlook for Daybreak?
So certainly
with the PIC's injection.
So certainly it needs money, it needs capital injection. And one of the difficulties we saw prior to Daybreak filing for business rescue was lack of liquidity. There was no cash flow coming into Daybreak, so to speak. And it was plagued with a number of parties threatening liquidations against the entity. So when one looks at the vehicle around business rescue, what does it aim to achieve? Business rescue is supposed to result in a better return for creditors than an immediate liquidation. And ultimately, preservation of jobs is key at the end of the day, and to get the company back to its former glory in some manner, shape or form. But the ongoing test is, will it result in a better return than an immediate liquidation? In the life of a business rescue, once a company goes into business rescue, a moratorium is then in place. It stops creditors instituting further legal proceedings against Daybreak. It gives it an opportunity to breathe. It's a window of opportunity for it to restructure its affairs, for the business rescue practitioner to get on board, identify what was the root cause of the financial collapse and why it ended up in that position. And from there, the practitioner will then have to start formulating a plan which will result in a return to creditors. And it's an ongoing test.
Yeah. Yeah, and you speak about the root cause, so the business rescue practitioner can get to that, but there are always early warning signs.
Look, in every company, there's early warning signs relating to its financial distress, and I think to a large extent, South African companies do not take, the warning signs seriously. And you generally look at lack of liquidity in terms of the company, lack of cash flow coming through these companies. You've got a weak debtors book, an aging debtors analysis. These are all signs that you start looking at in the marketplace. They're not always 100% perfect. Some industries are very different to others, but those are generally the warning signs that one starts to see coming out of a company going into or tinkering into financial distress. Now, what we should be doing in South Africa, and this is something which we do with our team phenomenally well, we go and we assess the companies and say, is this a candidate for a turnaround, an informal workout? Is it a candidate for a business rescue? Is it a candidate for a liquidation and be traded out of a liquidation process? And not every company is a candidate for a business rescue. Some companies are just better suited going into liquidation and trading it out there. It depends upon the liabilities. It depends upon the sector. But in the life of Daybreak, I don't think they had an option but to file for a business rescue.
Yeah, but with the case of Daybreak and speaking about the 2,800 workers, our reporter Ndogozo Kumala has actually been focusing on this story for a couple of months now, is the frustration that comes with the employees not being paid and the promises continuously coming through that you will be paid, you will be paid.
So under business rescue, there's a waterfall process for employees. So they will get paid through the process. And from what I understood is employees were paid all the way up until the commencement of rescue. Effectively, the cash had run out at the time of the filing of business rescue. And that was where the money that was injected by the likes of the PRC are very much welcome. They'll be allocated towards post-commencement funding for the purposes of the business rescue, and also to pay the providers during that time. So the practitioner, effectively, to put it back into very simple terms, he draws a line in the sand. Everything pre-business rescue will be subject of the business rescue plan, which we will see published on the 22nd of August. Everything post-rescue, the practitioner should be paying that in the ordinary course to the extent he has the means available to do so. Alternatively, he will have to classify that as post-commencement debtor or a post-commencement financier, and depending upon which way you then fall into a ranking. So employees will get their salaries out, even for services rendered post-rescue. depending upon the cash flow, it may not always be immediate, i.e. at the end of the week. There may be a 2 or 3 day delay in between. But managing the financial affairs is a difficult task for the practitioner, bearing in mind he's got numerous sites to operate, got to keep the electricity on, security in place, and a number of other factors.
Yeah, just quickly on another matrix, which is now the transformation matrix, the PIC investing in this business. And I remember the executives being on the show, and their argument was that we're not getting the necessary support from the PIC, considering how difficult the industry is as well. Is that a legitimate defense to say that the reason why the business hasn't been doing so well is because we're not getting the support from one of our biggest financiers?
It's a difficult question to answer, and I'll tell you why. Because you need to look at what point in time were they asking for support from that investor? How far before the rescue? Was it when the first bailout was given? So one needs to put that back into the context and say, when did it occur at that point in time? Under a business rescue, remember, the practitioner's got quite a bit of powers afforded to him under Chapter 6 of the Companies Act. So if you have an investor that's not coming on board and not doing anything, the practitioner's plan could be, well, then I need to find a strategic equity partner and I need to bring them in. He also has the ability to go and source additional funding if he's able to do so from third parties or third-party financiers to the extent that the existing shareholder does not want to inject. So, and if you look at the lifeline of chickens in South Africa, I mean, the majority of meat consumed in the country is poultry. So
and it's one of the cheapest proteins.
Correct. So it would be hard to not find an investor. And I think you will find a lot of parties in the marketplace wanting to buy up these operations. There is a market for it.
Yeah. Currently, I don't know how much you can speak to this about. Are there companies that have shown interest, like the likes of Astral Food?
I believe parties have reached to the practitioner, have asked for meetings. I believe there are some interested parties, but it's still early stages.
Still early stages. Just quickly before we conclude this chat as well, speaking about a business rescue, it also sometimes gets tested by the court whether it is valid or invalid. And in the case of Mango, we've seen that it has been declared invalid. What are the chances of Mango taking back to the heirs again, considering, of course, now we have the story of FlySafair and the flights that have been cancelled, the impact that is happening, that is having on their domestic flights. And we know FlySafair, for instance, currently has 60 to 65% of market share in domestic flights in the country for low-cost airlines. Speak to us about that. Is it possible at all for Mango to go back?
So if we take it back to aviation in South Africa, I mean, we would like to see more airlines in the sky because obviously it stimulates the economy, it's a sign, etc. Going back to Mango, Mango has not flown since 2021, since they ceased the operations, and they've lost a lot of their routes. They've lost their planes. There is no assets left behind. The court ruled effectively over there in the matter that the plan cannot be implemented in its current stage and form. What does that mean? It means that the practitioner either has to liquidate or he has to take the judgment on appeal, which he's taking the latter on. Now, the ongoing test through a business rescue is, will it result in a better return for creditors than an immediate liquidation? And the question you need to ask is, what is there left in Mango? You're effectively left with the name Mango and almost no assets. You don't have trade routes, you don't have most of the licenses, so what is there left? Ultimately, they should be liquidating that airline and not continue running the business rescue process.
Yeah.
And that's where we have a huge difficulty with.
Is competition a factor at all that is considered when you place a company like Mango, for instance, under business rescue?
Look, from a public perception point of view, you may have competition issues, but to the extent that you still have competitors flying and you are still able to service the market, and you're still able to render goods to the public at large, you shouldn't have any issues in terms of competitor behavior, as long as you price correctly. But again, the job of the practitioner is to go back to the process, look at where are we bleeding out, where are we running short of funding, why are we not getting money in, and try and stop the bleed inside of a corporate at a very quick stage. And that's what they should be doing almost immediately. But these ongoing business rescues with no line of sight and no end in sight, they should be flipped into a liquidation or converted.
Do you think that the Companies Act could prohibit that? If you look at, for instance, was it Chapter 6?
Chapter 6 on its own does need amendments. You can ask any practitioner in town, says that Chapter 6 should be overhauled. But in its current state and form, the mechanisms are there for practitioners to convert proceedings into liquidation far sooner. And the courts are looking more and more into it. So there's a lot of good jurisprudence out there and a lot of good judgments which have come out as of late. But practitioners need to be more realistic. Can the company be saved? Yes or no? And they need to make hard decisions a lot quicker, because you might be able to resuscitate the company through a liquidation process and sell it back out, compromise the debts under a liquidation far quicker, far more efficiently than running a business rescue process which takes you nowhere.
Yeah, and it's all about saving jobs at the core of it as well. Yeah,
correct.
Thank you so much. Gareth Cremen is a business rescue lawyer.